Hello friends, if you are already receiving Social Security or you are within a few years of claiming this video was made specifically for you. There is a belief held by a lot of retirees and pre-retirees about their Social Security earnings record, and it has to do with a deadline that sounds far more permanent than it actually is. Many people assume that if an error crept into their earnings record years or even decades ago, the window to fix it is permanently closed. In many cases, that is not what the rule actually says. The Social Security Act establishes a standard correction window and then carves out exceptions that keep the path open as long as you have documentation. That is what this video covers. Quick context before we get into this. This video is made for United States retirees and pre-retirees who are on Social Security or approaching it. The goal is to help you understand what the correction process actually looks like so you can decide whether to check your own record and what to do if you find something off. Everything in this video comes from publicly available official information, the Social Security Administration, the Social Security Act, and the IRS, and I will name each source as we go. This is educational content only. It is not personalized financial tax or legal advice, and nothing here is a promise that you will receive any specific amount of money. Before any major decision, talk to a licensed professional who knows your circumstances. Now let us get into what actually matters. Subscribe now and turn on the bell if specific sourced information on Social Security decisions is useful to you. And before we start, have you ever gone through your earnings record year by year? If you found something that did not look right, tell us in the comments. We are running a countdown of 5 things every Social Security recipient needs to know about their earnings record. Scrambled order, we start with number 5. Number 5, the 2 official correction forms and when you use each one. If you find an error in your earnings record, there are 2 paths depending on what documentation you can access. Path 1, you have your original W-2 forms or old federal tax returns. The form you need from the Social Security Administration is Form SSA 7008. That is the official request for correction of earnings record. It is free. You list the years in question, attach your documentation, and submit. The Social Security Administration is required to review it. If the correction goes through, your record is updated and your benefit is recalculated going forward. Pause this right now and write that down. Form SSA 7008. If you have seen other videos on this topic, some of them misstate that number. The correct form confirmed by the Social Security Administration is 7008. Path 2, the employer no longer exists. This is the situation most people assume ends the road. It does not. You can request a certified transcript of your tax returns directly from the IRS. That is IRS Form 4506T, the request for transcript of tax return, free to request. The Internal Revenue Service keeps certified records of every return you ever filed, and that transcript is accepted by the Social Security Administration as documentation for a correction request, even when the employer is completely gone. Write that one down too, IRS Form 4506T. 2 forms, 2 agencies, Form SSA 7008 from Social Security when you have documents in hand, IRS Form 4506T from the Internal Revenue Service when you need to retrieve records from a federal source. Number 3, how to read your statement and what to look for. Your Social Security statement is a view of the master earnings file, the actual data your benefit was built from. Access it through your online account on the official Social Security website at no cost. When you open the statement, find the earnings history table. You will see a list of every year going back to when you first started working with a dollar figure beside each one. The column you want is labeled Taxed Social Security Earnings, not gross income, not total wages. That specific column. Go through it year by year. You are looking for 3 things any year where you know you worked but the figure shows 0. Any year where the number looks dramatically lower than what you actually earned. And any year that seems to be missing entirely. The years that matter most are your highest earning ones because those go into your 35-year average. An error in a high-earning year pulls your monthly check down more than an error in a lower-earning year. Start there. One more check if you have fewer than 35 years of earnings on record because you took time off, raised children, or worked in a job not covered by Social Security. The Social Security Administration fills those empty slots with zeros. But sometimes a year that shows zero is not actually empty. Sometimes you worked during that period and the earnings were simply never recorded. That is worth verifying against any paperwork you have. If you have had to track down old paperwork or deal with a gone employer, tell us in the comments. Number 1, what the master earnings file is and why errors in it matter permanently. Under your Social Security number, the federal government maintains a permanent record of every year of earned income reported on your behalf since your first job. Per the Social Security Administration, your monthly benefit is calculated from your 35 highest earning years in that file. Those years are adjusted for inflation averaged and run through a formula that determines your payment. That is why a missing year is not just a paperwork gap. A zero inserted into one of your 35 highest earning years because an employer failed to report correctly or a Social Security number was transposed is factored into your benefit from day one and stays there. The Social Security Administration does not run an automatic review to catch these. The data goes in, the benefit gets calculated, and the check arrives. If someone finds the error, it is because they looked. Number 4, the correction deadline, what the Social Security Act actually says, and the exceptions that change the picture. Under Section 205 of the Social Security Act, there is a standard window for correcting earnings errors 3 years, 3 months, and 15 days from the end of the calendar year in which the wages were paid. After that window, the Social Security Act says the records are presumed correct. That sounds final, but presumed correct is not the same as permanently sealed. The Social Security Administration's own published processing guidelines recognize categories of error that remain correctable beyond that window, regardless of when they occurred. The most significant, if you have a W-2 from the employer for that year, or a filed federal tax return, the Social Security Administration can correct the record whether the error happened 3 years ago or 30 years ago. Errors caused by employer reporting failures or transposed Social Security numbers fall under clerical error categories the processing guidelines address directly. So here is the clear answer. Most people assume the window to fix an old error is permanently closed. For the majority of documented errors where a W-2 was filed or a tax return submitted, that assumption is wrong. The path stays open. The documentation requirement is higher, not the door locked. Here is an illustrative composite that reflects the kind of situation the Social Security Administration processes in correction, requests not a specific named individual, but a realistic scenario drawn from documented patterns. Carol is 63, a retired factory supervisor from the Midwest. She worked 10 years in the 1990s for a manufacturing company that handled payroll manually. When she downloaded her Social Security statement the year before retirement, she found 3 consecutive years from that period showing 0 in the taxed earnings column. She located her original W-2 forms in a storage box filed Form SSA 7008 with the W-2s attached, and the Social Security Administration recalculated her benefit. Her monthly payment permanently reflects those corrected years every month going forward. The paperwork was in a box. The form was free. What it required was looking at the statement in the first place. Number 2, the climax. The specific types of errors that slip into Social Security earnings records and why they are more common than most people expect. The first type, employer reporting failures. Employers send wage data to the IRS with every W-2 they file, and that data flows into the Social Security Administration's master earnings file. A small business handling payroll by hand submitted incorrect figures. A company in financial trouble filed incomplete reports before closing. In cases like these, actual earnings are absent from the record or listed lower than what was paid. The second type, transposed Social Security numbers. If an employer transposed 2 digits in your Social Security number on a W-2 or tax form, that year of earnings may be sitting unassigned in the system. Your correct record shows 0. Per the IRS, a certified transcript of every return you have filed is available free, and that transcript is accepted by the Social Security Administration for correction purposes, which means the employer being gone does not end the matter. The third type: name change errors. Anyone who changed their last name after marriage or divorce without updating their Social Security records may have years of earnings sitting under a different name. If the name on file does not match what the employer submitted, those earnings go unassigned. The fourth type: self-employment gaps. Anyone who is self-employed and paid self-employment tax through Schedule SE knows those earnings flow differently into the system. Errors on that schedule can produce years that appear lower than what was actually taxed. None of these required intentional wrongdoing. All of them produce the same outcome, a monthly check permanently lower than it should be, and none of them fix themselves. One quick note for two specific groups. If you are still working, check your statement now. If last year shows 0 and, you worked, walk into HR and address it while the company still exists. Finding that out after the company is gone is a harder situation. And if you are watching this alongside an elderly parent not comfortable with online accounts, this is something you can do together in about 20 minutes. Open their online Social Security account, go through the earnings history year by year, and compare it against whatever old paperwork they have. One corrected year on, a fixed income changes every month going forward. Here is the full picture. Your monthly benefit is built from 35 years of data in a file the government has maintained since your first job. Errors enter through employer reporting, mistakes, transposed numbers, name, mismatches, and self-employment filing gaps, and the Social Security Administration does not flag them. The standard window under the Social Security Act is 3 years, 3 months, 15 days, but documentation exceptions mean the path stays open far longer for most people. Form SSA 7008 from Social Security when you have documentation. IRS Form 4506T from the Internal Revenue Service when you need records from a federal source. The statement is free, the forms are free. The longer original paperwork sits in a box, the more likely it becomes unavailable. Recap. Number 5, Form SSA 7008 from the Social Security Administration and IRS, Form 4506T if the employer is gone. Number 4, the standard deadline is 3 years, 3 months, 15 days. But documentation exceptions keep the correction path open for most errors. Number 3, find the taxed Social Security earnings column, check for zeros or numbers that seem too low. Number 2, the errors that cause this are employer reporting, failures transposed, Social Security numbers name change, mismatches, and self-employment filing gaps. Number 1, your benefit is calculated from your 35 highest earning years, and the Social Security Administration does not audit that file for you. 3, log into your online account on the official Social Security website, open your statement and look for zeros or unexpectedly low years in the taxed Social Security earnings column. 2, if something does not match, gather your documentation. Original W-2s are the strongest evidence. If those are gone, request your transcript from the IRS using Form 4506T free and accepted by the Social Security Administration for correction purposes. Then file Form SSA 7008 with your documentation attached. 1, before making any major financial decision based on what you find, speak with a licensed professional who knows your full situation. This video explains the process. A qualified advisor helps you navigate your specific circumstances. Who in your life needs to see this a parent on a fixed income, a sibling who just retired, someone who worked for a small business in the 80s or 90s and has never checked their record? Share this with one person. If your situation is that the documentation is completely gone, no W-2s, no old returns at all. The next video covers the fallback options the Social Security Administration has for exactly that case. That is queued up now. If you want those 2 form names again, they are at the 4:45 mark in this video.